Well, we just learned from Jolyne Caruso that millennials are 70 million strong in our economy, and now bigger than the baby boomers as a demographic. And I'm going to harken back to Stan Salvigsen. Most of you won't remember who he was. He made one very important call in the early 80s. He said, baby boomers are going to be the reason that the equity market goes up for the next 20 years. It was a brilliant call. He's no longer with us. We're in the echo now. And I do believe that both crypto and the equity markets are going to be powered by millennials. In fact, Tom Lee at Finstrat,
yep.
he has done the arithmetic the way that Stan did. And I think he says this bull market will not end at least until 2026, and maybe not until 2038 when the number of millennials peaks out there. Well, I went through it in the 80s and 90s, and nobody believed him, thought it was a ridiculously simple call, but when you look back in history, it was a pretty good call.
Okay.
Bitcoin.
5 years from now, what's it worth?
If we're right, and companies continue to diversify their cash into something like Bitcoin, and institutional investors start allocating 5% of their funds towards, I'll just say Bitcoin for right now, because we did that, we framed it for Bitcoin, could be for other cryptos as well. We believe that the price will be tenfold of where it is today. So instead of 45,000, over 500,000.
If you could own Bitcoin, Ethereum, or some other crypto currency, and you could only own one, which would it be?
That is becoming a harder and harder question to answer. I think I'd default still to Bitcoin because countries are now deeming it legal tender, and we haven't even put that into our thinking. Ether, however, is seeing an explosion in developer activity thanks to NFTs and DeFi. I'm fascinated with what's going on in DeFi, which is collapsing the cost of the infrastructure for financial services in a way that I know that the traditional financial industry does not appreciate right now. So it does have to move from proof of work to proof of stake. That transition is underway and seems to be taking hold. Here's how I'll answer that question. Our confidence in Ether has gone up dramatically as we've seen the beginning of this transition from proof of work to proof of stake. We'd still probably do 60% Bitcoin, 40% Ether.
For all of that to happen, do regulators, especially US regulators, need to buy into this in a major way? I would also say that we just saw it in the last week. Brian Armstrong runs Coinbase. You have a stake in Coinbase, has now gotten into a somewhat bitter feud with the SEC over how the ability to offer effectively a yield product on some of these cryptocurrencies, specifically Bitcoin, will work.
Yes. I think regulators, our working assumption from the beginning was that, and this was based on meeting with them, meeting regulators, both state and local and federal, was that no regulator wanted to be blamed from preventing the next big technology breakthrough to happen in the US. And that has proven true. Now we've got Chairman Gary Gensler. I'm really happy he understands crypto and understands the merits of Bitcoin in particular. He is a regulator though, and he's a hardcore regulator. What Coinbase did, I mean, I was shocked when I saw Wells notice. Are you kidding? They haven't even released the product. Like, what is this? And I think what that Wells notice is doing, it's a call out by regulators saying, we got to discuss this stuff because this is happening very quickly. And I think we are going to bring courts into the system. This happened in Canada. A company called 3iQ sued the regulator there and won in court. So they were able to issue Bitcoin ETFs and closed-end funds and Ether as well. So I am beginning to think that Coinbase doesn't mind this at all. And if you saw the stock reaction, it hardly budged, right? So I'll first talk about the trading around what we do. I have been managing money since 1990, so for 31 years. And I've always had other investors or speculators shooting against us, because guess what? Even when I was managing separately managed accounts for wirehouses, I would be posting models. That word would get out there, what we were doing. When we posted our models out there, it would get out, and lo and behold, these stocks would take off. So I've been managing with that in mind for years and years. And so we don't have to buy a stock. If someone wants to take it up 20% the day after we buy and we haven't finished our buy, I'll finish it another time, because I know disruptive innovation is inherently controversial and we'll get another shot. In terms of what's going on now, I mean, I so admire the millennial generation. Yeah, as you say, I'm sure there are people trading just because their friends are trading. But the hunger for knowledge that they have, and the gratitude to us for the kind of research that we put out, the depth of our research, our tweets, our analysts are all tweeting. We have to be, we're on the right side of regulation. We know what we're doing there. We have someone from the SEC who became our CCO. So their hunger for information and their gratitude, it has been extremely humbling in a way. You know, we get a lot of people coming up to us and thanking us for that, because we've opened their eyes to a new world. Let me give you a bit of a difference. When my children were in high school and college, I was trying to teach them about the stock market. I was trying to get their interest. Nada. You know, it's almost like crypto had to happen. That got them interested. And to the extent they were looking at our research around crypto and others, they're educating themselves, and they love education. It's one of our mission and values. So, we meant to do that not because we knew this was going to happen, but because we want parents and grandparents and the children themselves to understand how rapidly the world is about to change, and to get your children, grandchildren, yourselves on the right side of change, whether it's investing or your education or your career.
Okay, a couple quickies. Do you own any NFTs?
I do not, but I gave one as a birthday present to Sig Sigalis, Chief Investment Officer at Jennison Associates. He turned 88, and he thinks it's the best present he's ever gotten. Angie Dalton, I don't know if you know her, from Sigmund Capital Growth, and I did, we split it. And his grandchildren now get to do layers of art on top of his digital art.
Do you think there's a bubble in NFTs?
Well, when I saw this original $69 million piece, I thought, okay, this has gone too far too fast. We're now talking about the creative world. And when I heard about Async Art, I don't know if you've heard of that company. Async Art has developed a digital ecosystem where artists can put out their digital art, and then anyone can buy pixels, and change it. And so you can do layers, and the original artist gets paid. I was walking when I heard the CEO tell his story, and my smile went ear to ear, because I said, oh man, this is going to be so explosive. This is how I felt when the internet first came about, like, oh man, this could be really big. Remember when everybody said, what's the internet? I had the same feeling here, because, creators, they don't get paid for, every iteration, so.
We hope that you have enjoyed this insightful video report. Please give it a like and do share it with your friends. To explore further on profitable Bitcoin analysis, please check out our live Bitcoin seminars and webinar events. The link access to the event platforms are listed in the description of this video below.